And I want to stop right there and visit with Oliver Sloup of Blue Line Futures in Chicago. And Oliver, I wanted to ask you what happened here, why the skids came off here on the soybean trade in the early going.
Well, I think the market's just getting a little bit tired, and we've been mostly consolidating for the better part of the last few months. Last week's USDA report didn't really give the bulls what they needed to continue this upward momentum. So now we're treading lower. The break below $14 is psychologically significant, and I think probably encouraged a little bit of profit taking, maybe some long liquidation as well, which could potentially open the door for extended selling pressure here at the beginning of the week. Now, with that said, I don't necessarily believe that the bottom's going to fall out of the bed, but I wouldn't be surprised to see us retest the low end of the recent range, which comes in close to 1360 to 1365 at that point. I think there's going to be some good value under the market. I think the fundamentals overall are still relatively strong, so I wouldn't get too worked up about one day's price action, although down 20 cents isn't really what you want to see. But again, it could be up 20 tomorrow. We'll see.
Soybean meal has July now trading $1.80 lower at $403.70 per ton. On the soybean oil market today, pressure there too. We have May down 136, July down 132 points. We're at 49.61 there. Now, if we shift over to the wheat market, all kinds of pressure in the wheat today as well. In Chicago, you have July down a dime at 630.5 per bushel. In the Kansas City market here, a lot of significant weakness there, with July down a nickel at 5.89 1/4. It is well off of its earlier low today by about a nickel. In Minneapolis spring wheat market, you have July now trading 11.5 cents lower at 6.49 3/4. And it's interesting. It sounds like the wheat has a couple of things weighing on it. What do you see from your angle there, Oliver?
Well, again, it's just kind of a risk-off atmosphere in the grain markets to start the week, but I'm not overly concerned. Wheat has been in a downtrend for the last couple of months, but last week got a bit of a technical breakout out above 625 to 630. That was previous resistance. That now becomes support, and is going to be very important to hold on to closing basis through today's session. If we can continue to achieve consecutive closes out above that 625 to 630, I wouldn't be surprised to see additional short covering take this market a little bit higher. So I think there's some pretty good opportunity in grains, and so long as we can defend this 625 to 630 level in the May Chicago wheat, I think that there's value to the upside here from the technical perspective.